Dividend investing, a strategy for income and stability. Dividend stocks are back in the spotlight, and for good reason. They offer a reliable stream of income and a hedge against volatile markets. But here's the catch. Not all dividend stocks are created equal, and with economic uncertainty looming, picking the right ones is more crucial than ever. Imagine this. You're holding a portfolio of stocks that pay you consistent income no matter what the market is doing. Sounds like a dream, right? Well, it's not just a dream. It's a strategy that has helped countless investors weather economic storms. By the end of this video, you'll know the top dividend-paying stocks to consider right now, why they're poised for growth, and how they can fit into your investment strategy. But before we dive into the specifics, let me hit you with this. Did you know that some of the world's most successful investors, including Warren Buffett, rely heavily on dividend stocks to build and sustain wealth? If you're not already looking at these opportunities, you might be missing out. And hey, if you want more insights into smart investing strategies, don't forget to like, subscribe, and hit that notification bell to stay ahead of the curve. Now let's talk about what makes a dividend stock worth your attention. A sustainable payout ratio, typically under 60%, is a better indicator of reliability. Take Johnson & Johnson, for instance. With healthcare demand surging due to aging populations and innovations in biotech, J&J is positioned to thrive even in uncertain economic conditions. Interruption time. Did you know that the average dividend yield for the S&P 500 is currently around 1.6%? That might seem low, but there are individual stocks offering yields of 3%, 4%, or even higher, without compromising quality. If you're finding value in this analysis, hit that like button and share this video with someone who's looking to grow their wealth. Let's move to another powerhouse sector, utilities. Companies like NextEra Energy have been favorites among dividend investors, and for good reason. Utilities are essential services, which means they're less sensitive to economic downturns. But NextEra stands out because of its focus on renewable energy, positioning itself as a leader in the green transition. With governments worldwide ramping up efforts to combat climate change, companies like NextEra could see significant growth while maintaining steady dividends. However, keep an eye on interest rates. Utilities are often capital-intensive, and rising rates could impact their borrowing costs, potentially affecting their payout capacity. Are you considering utilities for your portfolio? If so, what's your strategy for balancing yield and growth? Let's pivot to technology, a sector not traditionally known for dividends but increasingly becoming a player in this space. Microsoft is a prime example. With a solid balance sheet, consistent dividend growth, and exposure to high-growth areas like cloud computing and AI, Microsoft offers a blend of stability and innovation. Its dividend yield might not be the highest, but the growth potential more than compensates. And let's not overlook the broader tech space, where companies like Apple and Texas Instruments are making waves with shareholder-friendly policies. But here's the question. Should you focus on tech for dividend growth, or stick to traditional sectors like consumer staples and utilities? Drop your thoughts in the comments because this is a debate worth having. Interruption time. Are you reinvesting your dividends or using them as income? Let us know in the comments. Reinvesting can compound your returns over time, while using dividends for income can help you weather economic volatility. Either way, it's a win-win strategy, but choosing the right one depends on your financial goals. Speaking of consumer staples, let's talk about Procter & Gamble. This dividend king has paid and increased dividends for over 65 years, making it a cornerstone for conservative investors. With a portfolio of household brands, P&G benefits from steady demand regardless of economic conditions. But here's the kicker. While staples offer stability, their growth might be limited compared to other sectors. Are you willing to trade higher returns for lower risk? It's a question every dividend investor needs to answer. Let's not forget about financials. Banks like JP Chase have rebounded strongly in recent years, offering attractive dividend yields while capitalizing on rising interest rates. However, the financial sector is inherently cyclical, meaning it can be more volatile than other dividend-friendly sectors. Diversifying within financials, by looking at REITs or insurance companies, for example, can help mitigate this risk. Speaking of REITs, real estate investment trusts like Realty Income are worth considering for their high yields and monthly payouts, which can provide a consistent income stream. But with rising interest rates, REITs could face headwinds, making stock selection more critical than ever. Are REITs a part of your dividend strategy? If not, what's holding you back? Interruption again. Did you know that reinvested dividends account for approximately 40% of total stock market returns over the past century? If you're not reinvesting your dividends, you could be leaving a lot of money on the table. Hit that like button if you're learning something new today. Finally, let's talk about international diversification. While U.S. stocks dominate the dividend space, international markets offer compelling opportunities as well. Companies like Nestlé and Unilever provide global exposure and consistent dividends, often with higher yields than their U.S. counterparts. However, investing internationally comes with currency risks and additional research requirements. Are you willing to venture beyond U.S. borders for potentially higher returns? Let us know in the comments. As we approach the end of this deep dive, it's clear that dividend stocks offer a unique blend of income, stability, and growth potential. But success in dividend investing requires careful stock selection, diversification, and a clear understanding of your financial goals. Whether you're a seasoned investor or just starting out, dividends can be a powerful tool for building wealth and achieving financial security. So what's your next move? Are you ready to add more dividend stocks to your portfolio? Or are you taking a wait-and-see approach in today's uncertain market? Drop your thoughts in the comments, and don't forget to like, share, and subscribe for more insights that help you navigate the complexities of the financial world. Until next time, stay curious, stay critical, and keep questioning the narratives that shape our economy. And remember, the best investment you can make is in your own knowledge. See you in the next video.